Guys, today I'm going to go over a couple of calls that were made in our trading room today. Morgan Stanley, on the daily chart here, you can look in the lower right, was gapping over this base. If we go up here to the upper left, you can see this is a 2-minute chart, and what I called was this first 2-minute buy right here. And the trigger was right here over 42. The stop was 38. So we're only talking about a nickel stop. Now, this is why it's so important to have how many R's you want for target 1 ahead of time. As far as the target for the day, if you look on the chart here, the bottom of this gap fill is at 1783, so that was the ultimate target. But if you don't have your target set ahead of time, you can run into trouble. So, let's go through and see what happens. You can see it starts to move up here. Now, entering at 43, stop 38, 2 R's would be 53, 3 R's would be 58 cents, 17.58. So it really doesn't have to go very far. So you can see it came up to the previous higher at 49 and it got through it. And now we got up to 52. Now we got up to 55. So right here, 2 R's are achieved. If you have in your trading plan to take at least part profits at 2 R's, you'd be taking some profits here. However, any other method it might not work out so well, and let's see what I mean. So now we've got the big bar down, and after the 2R you got a quick move back down. Remember, our entry was 43, we're down to 47 now. Came all the way back down to 45 bouncing on the 20 MA, trying to bounce here, and now we're rolling over. We're getting a 2-minute failure here under 45. If you use a 2-minute failure, you might stop out at break even if it goes to 43, and there would be your stop out. So it's the difference between making 2 R's or no R's. Now, as I said before, our ultimate target was 1783. So we're very far off from that. So you can do there's many different ways, many different options you could use. One could be, though, that you always take partial profits at 2 R's. It could be 1/3 of a position, it could be 1/2 position. I wouldn't recommend it being all a position, especially when you have a potential target here at the bottom of this area at 1780. If we were getting in at 1743, you're talking about a 40-cent target almost on a nickel stop. That's an 8R trade. So you don't want to be taking everything at the 2R profit. But it is a good idea to possibly take partial profits at 2 R's and try to get the rest of the target. So that was the first trade. After that, you can see that the stock came back down and you would have gotten stopped out. Now our initial stop was all the way down to 38, and let's just see if it ever hits out. And even on the initial start here, you would have gotten stopped out at 38 on this. Interesting enough, 38 was that low, and then it just took off from there. Now if we look at it on a 5-minute chart just to see if you could have managed it a different way, here's this pullback to 38. We're coming into it here, right there, at the 20 MA on the 5-minute chart. We bounce off the 20 MA of the 5-minute chart after making a lower high and a lower low, and we just make a V bottom and just go right up from there. We get up to 1759. There's that 1774, close to 1780 target we were looking at, and there's 1781 at the end of the day. So, and then we even get up to 89. So that's the difference between making no R's, possibly 2 R's on part of your position, or if you had a more liberal stop, and again, initially, if your stop was 38, if you gave it a 3-cent stop instead of a 2-cent stop underneath 40, you would have never gotten stopped or trailed out here on this back portion. That's the these are the minor nuances between having a 2-cent stop, a 3-cent stop, and setting your pivots. A difference between a break-even day, a 2R day on part of your profits, or potentially an 8R day on maybe all or some of your profits if you give it a little bit more room. These are the choices that we have to make every day as traders, and this is a great example to show you how, depending on your trading plan, if you have one, how the outcomes can be dramatically different. Thanks for stopping by. We'll see you next time at tradingwings.com.